Good morning, everyone, and welcome to Transform 2022. My name is Grant Chapman. I work in the advisor marketing team here at Intuit Australia, and I'm your host for today's session. I'd like to begin by acknowledging the traditional owners of the land on which we meet today, the Gadigal people of the Eora Nation, where I am here in Sydney, and to pay my respects to their elders past, present, and emerging. Today's session is the third in our Transform 2022 series, and it's called Fixing the Fundamentals. We're looking at scope, billing, and engagements today. And it's really designed to help you do just that, to fix those fundamentals. First, a little bit about us. I'm sure that everyone on the call today is aware of Intuit's flagship product, Quickbooks Online, given that it's used by more than 300,000 accountants and bookkeepers worldwide, as well as more than 5.1 million small businesses. Some of you, though, may not be aware of the functionality in Quickbooks Online Accountant. It helps smaller accounting and bookkeeping firms to manage their clients, manage their workflow, and helps with tracking their time and billing. On the compliance front, QuickBooks Tax, powered by Lodgit, is an online tool that helps you manage your tax and BAS preparation and lodgement needs. We've had hundreds of accountants, hundreds of bookkeepers start using it just this financial year. So if you haven't had a look at it yet, stick around. I will let you know how you can get free access as part of the QuickBooks Pro Advisor program a little later in today's call. Super important as we start to edge closer to tax time. Like I say, today's session is called Fixing the Fundamentals, and we're going to take a look at scope, at engagement, and at billing. We're presenting today's webinar with our Pro Advisor program partners, Ignition, who many of you may have known as Practice Ignition. Ignition make it simple to engage clients to get paid and run your firm, automating engagement letters and payments, and really freeing you up to do what matters most, which is looking after your clients. We'll have some information for you on those discounts our Pro Advisor program members can access on their plans later in the webinar too. Today, we are going to look at scope and scope creep. It is the enemy of every small firm. It chews up your time, it reduces your income. It also creates unrealistic expectations in your clients. A lot of firms, however, really struggle to see how it keeps happening. So today we're going to look at the basics of scope, how you can better define your engagements, and how you can really reduce the risk of scope creep. Before we get started, let me take you through some very quick housekeeping. So we've had hundreds of people register for today's event, and we will have a Q&A session at the end of the presentation. So if you have a question, please submit it through the Slido chat panel on your screen there, and we'll aim to answer as many questions as we can. Today's session is being recorded, so we will provide everyone who registered with a copy by email. So watch out for an email in your inbox, and that'll let you review any of the content shared today, as well as share it with your other team members. If you're having any technical difficulties with not being able to hear or see the presentation, we suggest restarting your device, refreshing your browser, or trying a different device. You can also navigate to the troubleshooting guide that's located at the bottom of the page. There is a link there to an alternate video browser. Again, you will receive a copy of today's session. You'll get a copy of that recording. So while it's not quite as good as the live thing, at least you won't miss a thing. We'll be running a couple of polls during the webinar as well. It's a great way for you to get involved and for us to hear your thoughts. So keep an eye on the polling section in the bottom of your screen there too. Let's jump in and try a poll straight out of the gate. So a pretty simple one to start. And I think because you're here today on a webinar that's looking at solving your scope creep headaches, I can probably guess what the results are already going to be, but let's find out. So the poll question: on a scale of 1 to 10, with 1 being never and 10 being almost all the time, how often do you find yourself doing work for clients that you're not engaged for or that you haven't agreed a fee for? So jump into the polling function there. 1 to 10, 1 being almost never, 10 being almost all the time. Okay, I can see some of these results coming in now. Yep, unsurprising, right? Yep, does look like quite a few of you are pretty regularly doing work outside of what you'd agreed on. Okay, great. So hopefully today we can give you some insights on how you can improve that situation. Thank you very much for your input and for getting involved in that poll. Like I say, there's a couple more to come through the rest of the session today. That's our housekeeping piece out of the way. Let's jump into today's session. So today you can hear from Rebecca Mihalic. Rebecca is the head of accounting over at Ignition. She was a founding partner of Aptis Accounting and Advisory, a cloud-based accounting firm in Sydney. and won the Innovator of the Year award at the 2018 Australian Accounting Awards for their focus on tech advisory and efficient business services. In 2019, Aptus joined the Business Depot team, which has expanded the firm's service offering to their clients, and Rebecca leads the Business Depot Sydney-based operation, as well as heading up their tech advisory offering nationally. We also have Shaye Thayer. Shaye's the head of accounting here at Intuit Australia, where Shaye basically leads the team who are responsible for supporting the success of our accounting and our bookkeeping partners through cloud accounting solutions and modern practice digitalisation. Shaye was previously responsible for building a future-fit accounting division for one of Australia's most prominent mid-tier firms and creating a premium client experience through an obsession with tech-enabled client delight. As an FCA with a long history in public practice, Shaye is obsessed with the potential for the accounting profession to have a profoundly positive impact on the lives of small business clients everywhere. I'll be your host today. Like I say, I'm Grant Chapman. I work in the advice and marketing team here at Intuit. I'm going to leave it to the experts now. I will be back at the end of today's session. For now, I'm going to hand over to Rebecca and Shaye. Thanks.
Hey, wow. Thanks, Grant, for that lovely introduction. Welcome, everyone. My name is Shaye Thayer, Head of Accounting at Intuit, and I'm joined by the fabulous Rebecca Mihalic, Director of Business Depot and Head of Accounting at Ignition. So, back to basics. What even is scope creep? In a way, this topic scares me, Beck, but it also excites me. When we talk about scope creep, what we're really talking about is how we manage the value conversation with our clients. And the reason it scares me is because much of today's best practice really, it challenges the way things have always been done. That scares me a little bit, but that also really excites me because I certainly don't want to see our advisors not getting paid for the amazing value they bring to clients every single day, or chew up any of their valuable time chasing debtors. So how has this whole concept of scope management and discipline around that really affected your firm, Beck?
It's really interesting because when you're thinking about scope creep, you actually have to understand what it is. And so many accountants don't really fully understand just how much of all the things, the extra things we do actually is scope creep. It's not just advisory. It's not just setting up a new company. It's not these one-off things. There is so much that we do every day that is scope creep, and we don't acknowledge it. We just let it eat away a little bit here and there at our whip and don't bill it, and then try to bill at the end of the year when we can, and the clients don't want to pay for it. And it's all about addressing and understanding what it really is. So at its core, scope creep is just what happens when you provide a client a service that's not in your engagement letter. That's all it is. It's super simple. And that means it's probably, I don't know, 50, 60% of what we're doing at the moment because it's not in our engagements. Particularly in the last couple of years, we've done so much work for our clients that we didn't know we were going to do going into the last couple of years. So chances are we have not documented that. We did not get their sign off 2 years ago to do a whole range of grant applications. So when you're looking at your scope creep, that's what it is. And it also happens when you don't have an agreed price. Now, not all of us do fixed fee up front, and a lot more of the industry is moving towards that. But what's really important about identifying additional services and getting sign off is not necessarily just saying this is the fee that we're going to charge, but at least discussing the parameters around how you're going to charge it. Will you charge it at the end of the job, partway through? Is it an hourly rate? Just having this conversation so that it's no longer scope creep, and bring your job back in scope, and don't have a fight with your client about whether or not you're going to get paid for the work. And all of these items are all items that we don't know are going to happen when we have that conversation with our clients, whether it's annually or 6 monthly, or even some of us who maybe are not doing the right thing and just an engagement at the beginning of the relationship. It's all new ad hoc work.
Yeah, you're so right. And I think about some of the things that I've seen in my career. So I've been in that, more boutique sized practice that had this really robust discipline around upfront billing, and their engagements were digitised, and they had no debtors. They definitely didn't have a debtors department. And I've also been on the other side in a really large practice where, squillions of debtors and whole departments of people working on collecting those, sending statements, talking to clients who are confused about service and fees and all of that sort of stuff. So I think what I realised is the scope creep affected both firms, and no matter how robust your processes are, like you said, things happen. COVID happened. Clients' business trading conditions changed, and they change all the time. And I guess my learnings were that, as a firm, particularly in the more boutique-sized firm that I was in, we, were so much better protected from these uncertainties where we had real transparency around our services and fees. And clients were happier when they understood more about this. I feel like uncertainty really runs against building trusted relationships. And so conversely, where we have certainty and transparency, it really builds those super strong relationships. So I really like your definition. I also like this definition around, when client expectations are not set is when we see scope creep appear and we get the pain. So whether it's annually that we do that expectation setting, or as new work crops up, or as we have new clients coming in, it's about, I think it's actually a really transferable skill set. And I mean that like broadly across life, right? Like I think about our teams, we need to set expectations up front around, what good looks like, and what we expect as team members and part of a team, and also with our clients as well. I think it's all about respect, and it's about transparency, and being upfront at the start to really build that wonderful relationship of trust. So let's talk about the impact of getting this right, or if I can reframe that a little bit, getting it better, because I personally believe that each step in the right direction here to better scope management will definitely help, and any little step will definitely help. So let's talk about getting it better. So in your firm, Beck, you've been through, quite a journey. You put the processes in place, lived and breathed it for one of the toughest and most workflow intense periods of yours and my careers, everyone's careers pretty much, I think. What's been the benefits of what you've seen within your practice and across the industry for your public practice peers?
We were actually really lucky that we implemented a great, robust strategy around scope before COVID. So tackling that during COVID was great because we had set our client expectations, but we went through a journey with them to prepare for that. And it's something that you can still do with your clients. And the biggest benefit is just getting paid for everything you do. And that's huge, because it's not about, you don't need to put on new staff. We're doing this work already. We're just not able to bill for it because we jumped in and we did it. A client rang us up, they asked for a cash flow, we prepared it, we sent it. They didn't know they were going to get charged. And if you send them a $2,000 bill, they're not going to be impressed because that was not discussed. That will be the fight that you have with them. So this is talking about, this whole process is making sure that your clients are trained to know that you don't do work unless there is an agreement that you're going to get paid for that work effectively. So that drives money straight to your bottom line. It gives you extra cash to reinvest in your business. You can invest in marketing. You can pay your staff what they're worth or what they want. We're all struggling with staff at the moment. Keep the great staff on board. Pay them well. Give them bonuses. Give them perks. These are some of the things you can do with the money. Take a holiday. Jesus, like who doesn't want a holiday? I know. I took 2 months off at the end of last year. I needed it so badly. And being able to afford to do that and having that cash flow in your business is life-changing for all of us. And the best part about this is it's about an education process with your clients, about your clients understanding your expectations of what you want from them to be able to work with them. And if they're not on board, then they're not your client anymore. Now, that's not a bad thing, because right now we are busier than we've ever been. There's more than enough businesses out there who need good accountants. You will replace that work. You will get paid by somebody else, and you'll work with fewer clients who pay you more per hour potentially, or however you're going to charge out your time, and you'll have better relationships. And that's what we're all here for.
Oh, you're so right. And certainly this is something we see with our pro advisors as well, where they do nail this piece, they grow, or should I say their revenue grows, because realistically, as you said, it's just about getting more of those fees to drop to the bottom line, because they're already doing the work. They probably don't want to grow because they don't want more work, but they're growing their revenue with the same amount of work just because they're getting paid to do all of it. And I think that's got to be the ultimate goal, right? You did mention team, and I'm really interested in this. And, you know, one of the things that I've seen, and this is part of this, you know, the way it's always been done type concept as well, is what I call the circle of doom. So where the partner will come in and, you know, traditionally it's the partner's job to have the conversation with the client and agree the scope and set the fee. But the team does the work, but they're not taken through the scope, or they're not empowered to manage the scope properly. So they end up blowing the whip because, you know, we assume best intent. They just want to do their best work for the client, and they might have one of those clients that, I'm going to pick your brain, I'm going to pick your brain, I'm going to pick your brain every 5 minutes, not realising it's not in scope. And then they get the write-offs. And then the write-offs go against their KPIs, and then they get in trouble. And so it's this circle of doom, right? And we'll talk a little bit later about how you know, really worked with your team on this stuff as well. But I always remember that. And just for everyone playing along at home, I've been out of practice. That sounds silly. I haven't been working in an accounting firm for probably a good 2 years now, but some of these things definitely stick with you. So I know that you know that I know that not all of our peers and advisors in the industry are doing even annual engagement reviews, even though the Tax Practitioners Board, APESB, I always muck that one up, APESB, and other governing bodies all recommend re-engaging clients on, you know, at least an annual basis. So what's stopping everyone, or what's stopping advisors from doing this? Are there gaps in their process? What are the barriers? You know, Beck, you've been on such a journey. Sorry. You know, at one point you must have a before shot you can sort of share with us, right? Why do you think firms are sort of not staying on top of this really critical process with their clients?
So it all depends, I suppose, where you grew up in accounting, right? And the kind of firm that you came from, and what was most important to that organization. And engagements were just a thing that in my growing up in accounting, that was just a document you signed when you were initially trying to sell to a client. And that was it. Every now and then they might change up a little bit, and we might renew it, but we got the sign off like 7 years ago. Why do we need to get sign off again? That letter said we were going to increase fees by CPI every year. It's fine. Don't worry about it. Move on. And I'm the first person to put up my hand. I started my firm. I did not engage every single client every single year straight away, because it's not even that it wasn't important. You get a little bit in your own way, and it's the principals and it's the partners and it's those people in the firm who are the ones who are getting in our own way. But I had to take that moment, and lucky enough that close to people who own amazing tech, that made this process really easy for me. And I had a couple of instances where it not dawned on me, but became really apparent I needed a better system. And those processes just kept happening where clients didn't want to pay because I did the work and I sent them a bill. And I always hated doing that because it was a bill that wasn't generated by an engagement. And I knew that was going to be a problem. And every time that's the way it went, I didn't get paid. Every single time. It's like, you know what? I've actually just had enough of this. Every $200 individual tax return, all the way up to, you know, $20,000, $30,000, $40,000 project, all of them need engagement letters, because I don't even want to chase $200. I don't want to chase any of the money. I just want to know I'm getting paid for what I'm doing. And the team knows that they're getting paid. Forget the KPIs and meeting those. We didn't even have them when I first started. I didn't have time for KPIs. we were growing too fast. But it's heartbreaking as a team member when you're doing a job you're passionate about and you're working in an organization that you love, and then your time gets written off and you see the stress in the people above you. You don't want to see that. And I remember, like that, even myself when I was a junior, there was nothing worse than that feeling that I worked so hard and for nothing. And that's distressing. So all of these things, and as accountants, we've let our clients dominate the relationship because they pay us. So they hold that over our heads. They pay us. They're the ones. We should be thankful that we're getting paid. We should be thankful that we've got clients. We don't live in that world anymore. There's not enough of us and there's more than enough of them, and they need us. And they've needed us for a long time, and they need us more than ever. So if there was ever an opportunity to take control of the situation, it's now.
I love that, and I love the power pose in what you're just talking about. You're so right. And I love that. I love that we've got here, because we really start. I think one of the biggest barriers that we, just as practitioners traditionally, that we've had or I've seen, and a huge barrier to change, particularly in big firms, is just almost not believing our own value. Like, we talk a big game in a boardroom, but then, oh no, we better write that off, and we couldn't possibly, bill all of that, for that particular job. And I'm just so glad we've got there. So I love hearing you talk about that. And I think we know from a client experience perspective that, it's so important to be clear about what we're delivering as advisors, but also at the end of the day, as accountants and bookkeepers and tax agents and BAS agents and CAs and CPAs and IPAs and all the A's, we actually have obligations around engagement that we are required to align with. APES 305, the Tax Practitioners Board guidelines, that is a mouthful.
It is.
Our two resources, highly recommend that everyone gets across in detail to really make sure that your firm is compliant. But, what about bill disputes, and what about professional indemnity? I can't speak today. I don't know what's wrong with me. PI claims, there you go. What about these things, Beck? Like, what have you seen in this space, and how does, a really robust engagement practice in your firm really help?
So not only does it keep us compliant, because we have all of these things that we need to comply with. It's so funny. I know the moments when I'm a total accounting dork, because I really love the Tax Practitioner Board Practice Note 3/2019, because it is plain English. If you have a doubt about what you should be doing in your engagements and how often and who, read that. They couldn't make it any clearer if they tried. They spell it out in black and white. Engage all of your clients separately. Engage them every year. Engage them every time something changes. Do not do work without an engagement letter. And what's really, really great about their practice note, and also even in the CA and CPA guidance and the IPA guidance, they all refer to the fact that we have a code of ethics as accountants that we're supposed to comply with. And there are so many sections of the code of ethics that would be really, really difficult for us to actually stand around and say, yes, we've complied with that, if we don't have engagement letters. Like, one of our code of ethics is not doing work without client approval. And a phone call that's not recorded is not really approval, particularly when some of us might go off on a random tangent. But like, these things are not, they're not in writing. They haven't been signed off. And we have in the past, and God, I hate admitting it, and I definitely know people do it now, but we do work when we're not even necessarily engaged by the person who called us. They could be calling on behalf of somebody else, but maybe it's a wife or a husband or a child or, brother, cousin, whatever it is. They'll have this phone call, oh, could you just knock this up quickly? And we're people pleasers as accountants. So yeah, I can do that. Take me 5 seconds. I'll just do it. It's fine. Don't worry about the risk. We'll just do it. It's okay. Now, all of that was not good enough 10 years ago, 15 years ago, 5 years ago, and it's still not good enough now. We have to do better by ourselves and comply with this, not just from the fact of making more money and getting paid, but just to make sure that we stay out of trouble. And it's only these documents that will keep us out of trouble if there is a dispute. Because this is what we come back to. If we've done work that's not in our agreement, our clients don't want to pay, what do we do about it? If our clients are upset with something that we haven't done, and it wasn't in our engagement, that actually is in our favor as well. So, if there is a complaint, I've done quite a few webinars with the Tax Practitioners Board. If there's a complaint made to them on behalf of a tax agent, by a client against a tax agent, the first thing the board will ask us for is a copy of the engagement letter. And it is so much harder for them to back us if we don't have one.
Yeah, part of a previous role in a previous life saw me attempt to create, I should say, a standard engagement letter template with agreed wording for all services nationally that both and all 52 partners were happy with and was compliant. So the trouble was, as soon as it was agreed, let's just pretend that was ever going to be a thing, 52 partners agreeing on wording. As soon as it was agreed, something would change in the guidance and we'd need to do a redo. So it would always take us another 12 months to reword, agree, debate, agree, get it signed off by the right department to make sure it was compliant, and then it would change again. So I do love hearing, like the likes of the CPA releasing their version control with their engagement letter templates, and like just being able to really just hone in on the bits that have changes and then nimbly add them back into the firm's templates. I love that. And this really makes sure that all of those things are covered, like making sure that the privacy policy of all the tech that we're using, that we've got a link in there. And as we move through to the land of open banking, making sure there's statements around CDR baked in there as well. I think I did read recently that the ATO's released some guidance pointing to client verification as well at that point of engagement. And it's highly likely that will become mandatory. We've already seen it in the UK and New Zealand. So it's just super critical that we understand at a practice level that all the guidance is to review and re-engage at least annually. It's consistent, all the guidance says. So what's your advice, Beck, on staying across all of these changes and getting them into your engagements? Like, what does your cadence look like in real life in your firm?
In real life in my firm, the best part about what we do is we use Ignition for our engagements. And because we are CAs and we're a CA firm, the partnership that Ignition has with CAANZ means that every year when they update their terms, my terms of engagement get updated, and I can send out my new engagements annually, which we do around about now over the next couple of months, because we do them when we do tax planning. It's the best time of year to re-engage your clients, because this is when we're talking about restructures and the changes, and we're doing the review of the last 9 months. So this is when we re-engage, and it's perfect timing. And I'll get nice new fresh engagements out with all the new rules, and it's fantastic. It's horrifying to think that there's potentially firms out there who are using old engagements without the updates. What about the firm that's using cloud technology that doesn't have the right privacy piece in there, or the firm that's offshored and is using resources from overseas, but that's not in the engagement letter? It's a huge risk and a potential PI problem for all of them.
Oh, you're so right. And I was just thinking, your firm must be doing pretty well with your compliance workflow. Like, I don't know if it's normal anymore. I'm out of the game too long, but I always remember that squeeze. Let's get past the 15th of May and then crawl to the 6th of June, and then quick, let's get our engagement letters out before it's July. Oh no, it's already July. I always remember that process and just thinking, there must be a better way to do this. Oh my goodness me. So risks around compliance. I think we certainly have covered that. So I'm going to just jump to the next slide. So we've talked a little bit about how important a robust disciplined cadence of engagement and re-engagement is for every firm, every accountant and every single bookkeeper. And I think the thing that makes practitioners the most squirmy is when they're thinking about moving to a best practice engagement model that is talking about money. So, there's this real hesitancy to talk about fees up front. And whether we like it or not, I'm 99% confident that following any conversation with a client or a potential client about a potential piece of work or service, if we don't mention the fees, they'll either ask about the fees or they'll leave thinking, oh, wonder how much that's going to cost. So like, I'm not suggesting, and we're not suggesting that a fixed fee model is the only thing that works for every single firm everywhere, but can you take us through some of the benefits that you and your firm has found from just including fees upfront in those conversations with clients?
Means that the client knows what to expect, and that's what this is all about, isn't it? Setting client expectations. And I used this example the other day where it's like, if you took your car to the mechanic and you dropped it off for a service, and then you were expecting this is going to cost you $200, and then you come back and all this stuff in the car's changed because that's what they understood of your engagement, and you have a $1,200 bill, you're not going to be really excited about that process, are you? You would have expected a phone call or some sort of information, a heads up. And that's with almost every other service provider we have in our world. We expect people to tell us how much something's going to cost. Accountants and lawyers are only the only people out there. You leave the room and you don't know what you're paying for, or you don't know how much it's going to cost, I should say. So when we're looking at implementing a new robust engagement process, it's all about bringing clarity to the job. That's all we're doing. Clarity and making sure that everybody knows exactly where they stand. So when you're looking at this, you should specify, this says specify terms of additional work, but it's not just that, it's of all work, everything. So don't send out an engagement letter that says, we're going to be your accountant and tax agent, we're going to take care of all of your tax work and all of your accounting work. Specify what that work is. We will do your annual accounts. We will process your depreciation. We will do your BASs. We will do list out everything you're going to do. So it's super clear also what you're not going to do. That's what I find a lot of people come unstuck with. Clients make an expectation or a guess that you're going to do things that maybe you don't think is actually in scope. When we're looking at fees, I am 99.99% fixed fee. There's always an outlier. There's always something that comes along and I'm like, that project could either take me 1 day or 7 months. I'm not really sure. Let's go in with a daily rate. There will be something that pops up, and it's on those big jobs where a client has, moving targets, or they're not really sure what they need. A lot of tech implementation runs that way. But outside from that, we are fixed fee. Make sure your clients read and agree to the terms. We can't force them to read it, but if there is something really, really important, there's absolutely ways to highlight that and bring that to their attention. We did that in particular when we sent new engagements for clients when we were doing Job Saver grants and JobKeeper and JobMaker and all the jobs that were out there. All of those grants could be audited, and they all had really, really strict requirements. So we brought that information right to the face of the engagement, near where the money was, so that people were reading it and acknowledging it. And the key thing here, which helps us with scope creep as well, is including terms to vary your engagements. And this is not, so scope creep, remember, is when we do something that wasn't included or if something falls out of our expectations. So it's not necessarily just an additional service. It could be when you've engaged for a service, but that service, once you get in there, isn't what you're expecting. So if you're expecting a super clean Quickbooks file, which is fully reconciled and the bookkeeper's all over it and it's great, and you get in there and it's a total disaster because maybe the person in there didn't know what they were doing, that's a difference in your scope, and you should be able to reprice that. That's no longer $3,000, that's now $10,000 sort of job. And you need to have that capability in your engagements.
Oh, I totally agree. And I really liked what you were saying around being clear about what's not in scope, because I think as practitioners, we fall into that trap of it being obvious to us what's not in scope because we said what's in scope. But some of the best engagement letters, and look, this is getting my full-blown accounting geek on here, one of my favourite engagement letters are the ones that are very, very clear, obviously, about what's in, but they say what's not. And they anticipate those assumptions from clients. And then the other ones that I've seen, they're pretty much combined, but they're in plain English as well. So we talked about the TPB's guidance being very plain English. The best engagement letters that I've seen don't read like legal wah-wah. They read like a business owner knows what you're doing. So it might seem quite simplistic sometimes, but it's actually really important, as you say, for the client to be able to digest what's going on. And we need to speak in plain English rather than in our jargon. And you used an example of a mechanic, and I always think of a plumber, right? So there's no way that you'd have a plumber come over and fix a whole bunch of water flowing out from under my tiles without coming and having a look at it, right? And, you know, we'd think they're a bit bonkers if they did quote without having a look at it. So I'm actually loving seeing this trend where accountants are getting read-only access to cloud files like QVO ahead of time, so they can jump in there and see just how dirty is the data. And so they get the best read on scope, like right then, and I know that probably scares a lot of us, you know, oh, I'm so scared of losing that client, or, you know, that I'll upset them because I'm talking about fees. And like I said, it's been a few years since I've worked in an accounting firm, Beck, but correct me if my read is wrong here. Everyone in the industry is flat knacker. So, you know, where before there might have been like a slight risk that the client might get upset or didn't like the price, and they take their work off to Jim down the road who's doing it faster and cheaper. But I feel like this is really remote now. Like, no one is cheap, and no one ever should be cheap, in my opinion. And faster right now is pretty unreachable, as we all sort of struggle to fill our seats in our firms. So personally, I think those upfront conversations really engender that confidence and trust the client in the client, and also, you know, sets the relationship up beautifully. You know, we go in, you know, power post, like you were saying, or I said, but you were doing, and I was making a diagram out of it. You know, we're really confident about the value we're going to deliver, and this is what the value is worth in fees. And this is how we provide services, and this is how we provide the best services to you as a client. You know, as trusted advisors, there are, you know, other more valuable and meaningful ways to differentiate our firms than just price. And I hope we're not seeing that too much anymore. But Beck, in your firm, I think, have you got a minimum fee? Like, is there ever any wiggle in that kind of thing in your firm?
No, there's no wiggle in our minimum fee, and our minimum fee is tiered as well. So we've got more of a minimum fee matrix. So it all depends on the size of the client and the service that they're offering. Almost every service we have has 3 different minimum fees depending on the size of the client, and that's how we determine it. And what's actually fantastic about that, it means that almost anybody in the organization can price comfortably and confidently, because we've gone to this effort to build this. And it's really only the super big clients that are totally outside of our matrix that needs, you know, a second set of eyes over any pricing. But we need to know what we're worth and what we feel like it, and what we feel that we bring to the party, and that's what it is. Our clients can't dictate our fees, and we shouldn't feel the need to compete with someone. And I won't do it. I won't compete on price anymore. Every time I do, I just regret it.
Good on you. That's one of the things I love about you. So let's talk about change management. Training, retraining clients, otherwise known as good old-fashioned client change management. So the most exciting thing about this step for me is seeing that shift in the value perception. You know, all the hard work our advisors do actually valued and rewarded by their clients. And I'm not meaning to sound critical of clients. I know there's amazing clients out there, but many of us do feel, you know, or have felt undervalued by our clients, and especially when they fight with us around fees. And this is a chance to, you know, as well, reflect on how we as practitioners have been complicit in creating this environment. When we spout an answer to a tax question in 2.4 seconds, the client only sees 2.4 seconds of value, because we've always billed by the hour and after the fact. So this 2.4 seconds does not reflect the 10 years of experience and the weekends getting up to date with new tax legislation and government stimulus packages, and neither does 2.4 seconds of an hourly rate. So let's talk about the hard conversations. It's much easier if you're, say, starting your own firm from scratch, to start your engagements how you'd like them. And I used, as I said before, I used to work in a big firm with some seriously heavily ingrained ways things were always done within their processes. And I think every second day I said, can we just blow this up and start from scratch? Because turning the ship's really, really hard. But you know, when you were reinventing this process in your firm, how did you go about some of these hard conversations with your existing clients?
So I was a little bit cheeky, unsurprisingly. I blamed I blamed it on the government because that was easy. There were a few different things. We had very serious conversations, and we know our clients, you know your clients, you know what kind of conversations you can have with them and how they're going to take different things. So we had a mix. So I had clients that it was just, this is a better process for you and for me. You want to know how much I'm going to charge you. You don't like the surprise bills. Let's put this in writing. This is the process. And we're going to do this every year, and we'll sit down and you'll know what it is and I'll know what it is. And we haven't looked at it for a while. And these are all these extra things I'm doing. And it was an open conversation with reasonable people. And then I've got other clients. It's not that they're not reasonable, but they're a bit like, oh, but you've known me for 15 years. Do we really need to do this? Like, yes, we do. And they're the ones most of us struggle with. So the approach with them was actually a little bit more formal, and it was written communication. I didn't print and send letters. It was an email. But in that email, it was very much so, we're reviewing our internal processes and our guidance. And I would refer to our rules. Our rules are, we need to do this. We are expecting, as most accountants at some point, to have a review by one of our member bodies or the tax board, because we do all have these. We want to get all of our systems and processes up to date. I understand it's a change in the way that we work, but to mitigate my risk, I need to move you to this program. Are you in or are you out? And that was it. It was just very simple. And it's amazing how much businesses then just feel sorry for you because, those guys, they just make your life so difficult with these contracts and forms. Like, they do, but what do you do?
So much red tape. Oh my goodness. I think that's clever more than cheeky, because it's actually like it's not true. Like you do have to do it.
That's right.
So why not use it?
Yeah. And then once you do this enough and you stick to your guns on it, you talk to them about it, you do it every year, then the clients start to expect it. And then you start doing it more than every year. It's for every time there's something that new pops up. Just send a quick, one-liner engagement or redo your whole engagement. If there's a few things that have changed during the year, then the clients start to know that you're not going to do the work. So this is all about you sticking to your guns and retraining them that if they ring up and ask a question, you're going to check the engagement. And if it's out of scope, they're getting a new one. You're not going to start until they sign.
Yeah. Love it.
And it's amazing how fast they can move when they're motivated.
I bet. So they turn those digital signatures around like that. I bet they really, really need that 2.4 seconds of advice. So your team, I know this, tech's been a real enabler here, and you guys use Ignition, which I love, and it directly integrates with QuickBooks Online Accountant, which is amazing. So when you were leveling up these processes in your firm, what was the impact on your team specifically, and how does it work across your whole team now?
So the best thing about Ignition is it's an easy way for my accountants to access their engagements for all of our clients. And that's the key thing, because you mentioned it before as well, is we forget to talk to our accountants who are working on the jobs and talk to them about what the scope is. We don't have time. We don't have time to sit down. We absolutely should, but we don't. So let's just accept the fact we're not going to do it and make it easy for them to get that information. So Ignition, it's one central place. All of the engagements are in there. Everyone in my team has access. They can go in and they can, at the drop of a hat, find out whether or not a client's engaged. So when they have that client that rings up who just wants to pick their brain for a minute, it's like, sure, no worries. Let me just check the engagement and see if you're allowed to pick my brain here. And we can do that. and we go in and we'll find whatever we need in a second. And because we have templated the hell out of everything, which is what I love to do, templates just, it's consistency of experience. It means that people can't get it wrong. It gives people confidence to produce a document or produce a contract or produce anything. Templates are amazing. So we have templated everything. And that means that my team can take a phone call and produce a new engagement, send out what they need to do, and get on with their job without putting anybody on either side at risk. That's amazing. That is great for their morale. It is great for our money. It is great for the team environment. It creates wonderful confidence in them to manage relationships at all different levels. The process is incredible. It's life-changing for some, particularly for junior members of the team who are just starting to get into talking to clients, giving them the confidence that they can say no because we have a process that allows for no is incredible. We didn't have that when I was growing up in accounting. There wasn't a process for no. It was just yes.
And I love that. And I think that no is so critical to landing, with our young team, getting them to appreciate the value of their own output. And it's really hard to land when you're, when you're more junior in the team, because you're just trying to learn everything. You're just starting to talk to clients. You're like, oh gosh, what if I say the wrong thing? But if we're not landing that intrinsic value at that level, then as we sort of graduate up through firms, and if those young people turn into firm owners, then they take with them this lack of value appreciation of their own stuff, and we have this big sort of circular issue of I won't bill properly because I don't appreciate my own value and blah blah blah. So I love that. I love how that empowers the team, and it also maybe helps with you not being a bottleneck. Maybe that would be awesome. Not that you'll be a bottleneck, but that normally happens. We have everything that needs to be approved by the partner, and it's like, oh, I've got 50 engagement letters to approve, or I've got 50 bills, and the turnaround for clients is poor. So I can see how your clients get an amazing client experience because you're able to do that. Love it. Okay, and you know what? My very, very first manager was mega, mega tough, but she was brilliant. And one of the most significant things she taught me was that you can never rely on anyone else to look after you. It sounds dramatic, but it is. You must hold yourself accountable and take ownership of looking after yourself. And this reminds me of her and reminds me of that thing that she taught me. Don't break your own rules. As partners and as directors and practice owners, what have you seen, Beck, that can undo some of this goodness?
Well, in our firm, it's me. So that's why I can say it with total certainty that we are the ones who break the rules. So don't do it, because I don't do it nearly as often as I used to, because it is worth taking that minute to breathe, remember your rule, remember why you put it in place, and follow it. I know that when you're growing a firm, when you're under resourced and you're running around, sometimes you just want to jump in and do whatever you have to do to get through the day so you can get home and get to bed, or probably get home, have dinner, and do some more work, whatever it is that we're going to do that day. But all it does is cause more drama down the road. Every single time I've broken my rule, I've regretted it. Every time I've done work without being engaged, I've regretted the outcome, particularly in the last couple of years. I won't do it anymore. I absolutely cannot. And it not just sets a bad example for my team, it sets a bad example for the client, because they know they got away with it once. They will then try to get away with it again and again and again, and you're just undoing all that good work. But it's like anything. Even when you're looking at raising children, you need to lead by example, and that's all this is. If you want to have these great rules in place, you need to follow them yourself.
You reminded me so much of my 9-year-old Avery then, like, follow through. She knows the consequences, but you're not following through. So she keeps trying it on. Oh my gosh. So when we're deliberate about implementing and being really disciplined about sticking to a robust cadence of engagement and re-engagement of our clients, we better manage scope creep and regain control over our client relationships. We de-risk our firms. We minimise that compliance risk by making sure, for example, that all of our terms of engagement have links to the privacy policy for our cloud providers, that they comply with APES 305 and the TPB, and we remove those headaches that inevitably come from doing work without prior written consent and approval. And we have more cash and more profit because we're actually being paid for all the work we're doing, and we don't put half of it in the toilet chasing debtors every week. We have better client relationships that are built on trust. They're really grounded in value and powered by transparency. And we have better team morale, which we all need right now with talent so hard to find and so hard to keep. Nobody likes writing off their time, and nobody likes goalposts moving all the time. So let's talk now about the great enabler, the key part of the how for firms who enjoy a low debtor, compliant, getting paid for my work kind of firm lifestyle. So one of my favourite accounting partners back at the firm where I used to work that I've talked a little bit about today, he used to say, what gets measured gets done. And I reckon I use that old adage just about every day, even now that I'm out of a world of timesheets and WIP and all that goodness. There's always a goal to shoot for. And one of the really important steps, if we're going to start managing scope better, billing for what we're really worth, and ultimately building a stronger client experience, is to get everything in a central place. As Grant mentioned earlier, QuickBooks Online Accountant helps more boutique accounting and bookkeeping firms manage their clients, their workflow, their time, and their billing. And you know what? Even I didn't realise what a pocket rocket QBOA really is. I'm only 7 months into this role, and very, very honestly, I was blown away when the expert team took me through the real power of QBOA. The Work tab lets you organise your workflow into projects and tasks to keep everything under control. A great little solution that really, really packs a punch, and especially when you integrate amazing tools like Ignition. Beck, please tell us a little bit more about Ignition.
It's a game changer. It's it was one of the first pieces of tech that I looked at when I started my firm, when I went out on my own. And I remember, and I've said this quite a few times, and I'm more than happy to say it again because I like it, but I told the sales rep at the time, I'm doing cartwheels in my head. I would love to do them physically, but they're just in my head right now because I was so excited at what it can do. So what it will do for you, we've touched on a lot of it today, it will generate your engagements. And you can template those engagements and have that template bespoke to your firm, your services, the way that you need to run with your pricing. It is central and easily accessible by your team. And once it's sent out and accepted by your clients, they can always find it again as well. So at all stages, both parties know exactly what they're engaged for, what is in scope, and how much you're going to charge them for, or on the basis under which you're going to charge them. The best part about it that has made the biggest difference to my firm is the payment collection side of Ignition. So along with sending out an engagement letter, our clients put in their payment details. I have total control over getting paid. My debtor balance is less than my terms date today. My debtor days. My debtor days are 3. That is really cool. And at some points, they've actually been in negative. And my WIP balance generally runs negative during the year because we have so many clients on monthly reoccurring. Now, this is not me just saying it because I'm trying to sell product. I am here with Ignition and QBO today because it really works and it changed my life. It meant that I could pay for everything and be comfortable in my business. And whether you're starting or growing or you have a mature business, cash flow is king for all of us. It's what we need to understand, we need to control and get better at. And Ignition is at the forefront of making that happen for us and keeping us compliant and keeping our clients happy. I mean, what's not to love?
I totally agree. Totally agree. And hey, enormous thank you to everyone for joining Beck and myself today. Thank you, Beck, as always, for sharing your amazing insights. And yeah, just thanks everyone for taking time out of your day to chat with us today. Back to you, Grant.
Thanks for that, Rebecca and Shaye. That was an amazing, engaging session. Really great to get those insights and to hear about some of the steps that people can take to start fixing those fundamentals, especially the piece around how important it is to set those client expectations upfront and ongoing. Now, Rebecca and Shaye covered a whole lot of ground there. We did go a little bit long, actually, but I didn't want to stop them because they're in such a groove. So we're going to provide more guidance on working through this process and some of the tips and traps for you to look out for. So keep an eye on your inbox. We're also going to take a deeper dive into scope and engagements at our Get Connected event in Sydney in May. So for those in other states, if you can't make it to Sydney, the event will be live streamed. So definitely make sure you are attending either in person or online for more guidance on getting your firm's engagement processes right and stopping scope creep dead in its tracks. We're going to jump into some very quick Q&A with Rebecca and Shaye. But before we do, a bit of a shameless plug. So if you are looking to transform your 2022, one of the best ways to do that is to look at the heart of your accounting and bookkeeping solution and to make sure that you're using the smartest tools available. QuickBooks Online Accountant can help you work more efficiently and grow your practice. It can help you manage your workflow, track your jobs, lodge your BAS and tax returns, invoice your clients, and a whole lot more. The best part, it's free. With tools like Books Review included, you can reduce your BAS prep time by 40%. You can save time and effort with simplified workflows and tools like Prep for Taxes that let you finalize client books on a single screen, correct them on the spot, and then seamlessly transfer that data into a client's tax return in QuickBooks Tax. QuickBooks Online Accountant is free to use. All you need to do is sign up to the QuickBooks Pro Advisor program, and that also includes free access to QuickBooks Tax powered by Logit. What's more, with our Convert and Grow offer, you can bring your client books over completely free. Now, as we mentioned at the start of today's call, Ignition are one of our Pro Advisor program partners too, and our Pro Advisors can access significant discounts on their professional and scale plans. Ignition currently help more than 5,000 accounting and bookkeeping firms virtually eliminate scope creep, to engage new and existing clients with clear scope of work, and to communicate value with impressive digital proposals. Ignition help get you paid on time by automating your payment collection, all of it in one place. Once a proposal is accepted, Ignition create your clients in QuickBooks Online, they mark their invoices as paid, and they even reconcile your payments. So we're going to share some more information on how you can get in touch with Ignition and access those Pro Advisor program discounts after this session. That was a whole lot to take in, but fortunately you can just visit the website on your screen to find out more. Head to intuit.me/pro perks. We are going to send you an email with some more details as well. Right. We are very short on time, so we're going to do a very, very quick Q&A with Rebecca and Shaye. We do have a few more questions that we won't be able to get to, but rest assured we're going to take those questions, we're going to use them in another content piece, we're going to use them to inform the session at Get Connected. So if you haven't had your question answered today, we are going to take it on board and we will get answers to you in a slightly different format. But for now, let's jump back into a quick Q&A. I'll hand back to you, Beck.
Thanks so much, Grant. We've had a question come through that's actually a really interesting question, Shaye. It's something we touched on a little bit, but let's go into it a bit more. How do we encourage our clients to actually read our engagement letters fully? We're all guilty of clicking accept whenever we're presented with terms and conditions on our iPhone. So how are we going to get our clients to really read them and understand them? How do you think we should make this happen? Because I know I'm guilty of it sometimes too.
Oh, me too. And this reminds me of something that happened on the weekend. I got a bit cranky with a retailer when I returned some clothes that I was trying on and they wanted to give me a gift card instead of my money back. So guilty. The first thing that I think about is just thinking about the demographic of client we might have. You know, we have mobile natives in our team, mobile natives in our client base. So if we're just emailing something, maybe we can think about a more creative way to do that. And, you know, I know there's great, I can't think of the right words, but where your phone makes it come up nicely on your phone. I don't know the right words for it, but
Mobile
I think
responsive.
that's the one, mobile responsive. I know there's great tools, and I believe you can correct me that Ignition absolutely does that. So let's think about delivery. If we can get it through on phones, maybe that's a good way to do it. Something else we talked about was just language. So if it's a 50-page legal document, I'm not going to want to read it. I don't think anyone's going to want to read it. So if we think about being concise but thorough and using plain English in our engagement letters, I think we've got better chance. What else do you think?
I think that the language is absolutely really important, but the layout too, and trying not to just do the nasty sales talk again, but Ignition's actually really great with their layout because it steps through the process. So it's not just this one long document that you receive. And even in the mobile responsive environment, you go through stages. You have the introduction, you have the ability to upload a video if you want to as well. And some people, that little video introduction explains to them what they've got to do. Then you go into the services, and that's really clear. And you can break down the services in details. And that's probably the bit that people spend the most amount of time on. And if there's something really important you want to bring to your client's attention, you would put it in there. Then you have the prices, and then you have all the T's and C's. And again, like the clear language and, not difficult looking fonts and nice, clear graphics the whole way through, and that process where it's not just something I have to scroll through but more like click through is much easier, I think, for particularly today's generation who are, like you said, doing it all on their phone. How do we make it easy for them to make sure that they're reading it and sign off? That's e-signing is the easiest thing in the world. This is how we get quick turnaround. Our clients will actually do it. No more printing and signing something and eventually getting around to scanning it, sending it back. That e-solution means that they can act on things quickly, which is what we also need.
And that's how you get negative debtor days.
Absolutely.
And I don't know, I must admit it's been too many months since I've opened Ignition, but from a practice perspective, can you see how long clients are spending on each of those components to sort of adapt their experience?
We can have a look at how long it takes a client from receiving an engagement to signing it off, and even how many times they've opened it. And really quite interestingly, you can actually see when a client goes back in and has a look at it another time. So if you've sent them an engagement and maybe a couple of months down the track, that you can actually go in and see if they've opened it again. And I've noticed this a lot now that I've trained my clients to actually expect new engagements. When they ring us, a lot of them check their engagement before they call us. So they're already prepared. They know if they're in or out of scope. And that is like, that's super cool. And that's the accounting geek in me again. I find that really, really cool.
That is super cool. That's utopia. That is definitely utopia. So I don't think that we can ensure that everyone reads everything all the time, but I think there's a few tips in there to help know more or help check that our clients are actually reading our engagement letters.
Absolutely. And I think that's all the time we have for questions. So throwing back to you, Grant.
Thanks, Beck. That brings us to the end of today's session. I hope you found today's webinar really valuable. Please remember that we do have more webinars in this series taking place covering practice management and covering getting ready for tax time. We've also got our regular Pro Power Hour webinar that takes place in late March, and we're looking at cash flow. Then again, in mid-April, where we're going to dive into the federal budget and what the budget announcements mean for you and for your clients. Visit quickbooks.intuit.com/au/events to find out more. Not the greatest web address in the world, but we will send you an email with details on all those events. I'd like to thank Shaye and Rebecca for a really amazing, engaging session. Tons of info in there. I hope you found it really useful as well. And thank you for taking some time out and joining us today. We look forward to seeing you at one of those upcoming events or webinars soon. Until then, stay safe.